A way for institutional capital to get into the Bitcoin ecosystem has been made possible by spot ETFs. Every day there has been a lot more demand for spot ETFs than supply from miners. This is especially true for the new ones that came out. Sometimes 8 to 10 times more people want something than are available every day. The tide is going up. It will make everything better. A leveraged operating strategy for Bitcoin has been made by MicroStrategy. These spot ETFs, on the other hand, make it easier for capital to move from the analog ecosystem to the digital economy. Every day, hundreds of millions of dollars of capital move from the analog ecosystem to the digital economy. MicroStrategy, a business intelligence mobile app, was started by Michael Saylor, and he used to be its CEO and executive chairman. A company that offers software and cloud-based services, MicroStrategy is the most prestigious publicly traded company in the world that has the most Bitcoin on its books. Since 2020, when the software company started using Bitcoin as a strategy, it has been slowly adding to its Bitcoin holdings. It started with 21,454 Bitcoin, which it bought for $250 million in August 2020, and now it has about 190,000 Bitcoin, which it bought for a total of $6 billion. In a recent interview with Bloomberg, Saylor's founder and executive chairman said that the company is still going to buy Bitcoin, even though the 9 spot Bitcoin ETFs are now in the market. Over 200,000 shares are now held by BlackRock, Fidelity, and the other 9 newborns. Saylor knows that the higher demand will make it harder for MicroStrategy to buy Bitcoin, but he is very happy about how much it will affect prices. There is 10 times more demand than supply, which is quickly draining Bitcoin. Balances on exchanges. In addition, a halving event is coming up in a few weeks, which makes Saylor even more optimistic about Bitcoin in 2024. Here are more clips from Saylor's most recent interview with Bloomberg, as well as clips from Bloomberg ETF. The Rational Reminder podcast had an interview with Balchunas. Both men who are very knowledgeable in their own fields talk about how important Bitcoin ETFs are and how they think they will affect Bitcoin prices even more in 2024 and beyond. Make sure you watch the whole video to get all the useful information from Saylor and Balchunas. Also, please give this video a thumbs up if you want to see more like it, like this video. Follow the channel and turn on post notifications to see more like it. Thanks and have fun with the video. Would you sell at any time? When would it be smart to make money there? I once famously said, I'm going to buy the top forever. Bitcoin is the plan for getting out. It's the most valuable thing. Right now, Bitcoin is one of the few assets worth $1 trillion, along with Apple, Google, and Microsoft. But Bitcoin is not like the Magnificent Seven. It is a type of asset. It's not a business. Those companies don't have enough space in their capital structures to hold 10 or 1, $001 in capital. That means Bitcoin is up against gold, which is 10 times what it is now. It's up against the SP index in real estate, which is a $100 trillion or more asset class that people use to store their money. We think that money will keep moving from those asset classes into Bitcoin because it is technically better than those asset classes. Since that's the case, there's no reason to sell the winner to buy the losers. Even though Saylor Senior Bloomberg ETF analyst Eric is a well-known Bitcoin investor and supporter, Balchunas is also very happy with the Bitcoin ETFs and how well they've done since they were first introduced. Balchunas and James Safar, who works for Bloomberg ETF, did a great job keeping track of the ETF applications before the SEC finally gave the go-ahead on January 10th. Since the Bitcoin-based exchange-traded products began trading, they have kept the market informed about how they are doing and how they compare to other ETFs and products that came out in January 2024. In one of his most recent tweets, Balchunas said that out of the 65 ETFs that came out in January, all 20 are Bitcoin. ETFs with BlackRock's IBIT, Fidelity's FBTC, ARK Invest's RKB, and Bitwise's BITB being the best. Even more amazing is that Bitcoin ETFs only made up 14% of the 65 ETFs that were launched, but they had over 83% of all when the post was written. In his talk on the Rational Reminder podcast, Balchunas talks more about how well the Bitcoin ETF launches went and what it means for Bitcoin to have these kinds of products. These are parts of the interview. What if you keep the newborn 9 away from anyone at GBTC and their mother will go crazy? I mean, it's the most successful launch of all time. If there were 20 stats, this would be number 1 in 15 of them. Early on, these things are moving in a very good direction, and you know that BlackRock has advertising campaigns. There is talk that this is a new type of asset by Larry Fink. Fidelity is involved, so all you have to do is trust these people whose products have a history of doing well. Give it time, and these products already have 2 things that you need for the ETF category to grow: high volume and low fees. These are the 2 most important things for the fish to bite institutions like high volume, advisors like low fees, and they both like some of the other. These products have plenty of both, so the stage is set. In an interview earlier, someone asked me how many of these would be here next year. I said all 11 now. You might find some strange things that come out and go away within a year. For example, you might find carbon credits plus Bitcoin, or they're going to throw a lot of garbage at the wall with 2x leverage Bitcoin. Some of it will land in the gutter right away, but I think these 11 will still be here in a year. Loyalty to BlackRocker. Bitcoin gains from being able to be held in an ETF. I mean, one of my comparisons is to when the Beatles went on iTunes. They waited 5 or 6 years after iTunes became popular so that younger people wouldn't listen to the Beatles. It was that easy when they finally went on. All of their albums went to #1 and everyone bought them. I think this is similar, but the order is reversed. Older people will think about buying it because it's an ETF wrapper and the SEC approved it. All of the ETFs have prospectuses that are 100 pages long. A great many lawyers, BlackRock is now in a trusted environment, which means that they are trusted. ETFs are like bridges to me. They connect any two worlds, are cheap, easy to trade, and available on all exchanges. Oh, I see. Convenience is a very underrated benefit of ETFs. If a business makes something easy to use, people will buy it. For example, one single stock ETF has over $1 billion in assets under management. If you make something even slightly easier to use, people will buy it. So I think you've got the lazy factor here, and going to do Bitcoin is a real pain for most people.